How's it, guys? Welcome back to FX Rhapsody. Today we're going to be doing analysis only on one currency pair. We're going to be focusing on the Australian dollar, US dollar. It's going to be a quick little video. So before we hit the chart, just go visit my website. It's on the bottom left corner over here. We'll be using the COT report like always, and you can download it for free under the resource tab on my website. And then you can also go to my brokers tab. You can have a look at my preferred brokers there. And then on the website, I've got some lots more cool content and all that kind of things regarding trading. So for those of you that's starting out, just go, browse through my website. I'm pretty sure you'll find some very interesting things there. So today we only focusing on the Australian dollar, US dollar. On a daily time frame, I just want to zoom out a little bit because I want to show you something. Just some of you might find it interesting. Let's see what happens here. So we see that the Australian dollar, I'm just zooming out a lot more so you can see a lot. So you can see this movement to the downside. You can see up and then down and then up and then down and then up again. So as you can see that price action plays a very crucial part in this currency pair. So the hunting of liquidity and price action. So you can see price going down on this movement, and then you can see price retracing up. So every time there's a retracement, price is hunting liquidity. So this is a daily time frame, so there's lots of liquidity lying just above that. And as you can see, as liquidity is being hunted, price moves down, going up again. And then you will find, that price just keeps hunting it. I mean, price goes up and goes down, it goes up, goes down, it goes up, hunts liquidity over here. Okay. You see what I'm saying? Before it goes down again. So every time before there's a big downwards movement, price is going and hunting that liquidity. So you'll have that liquidity that's intact here. So basically hunting that, going up, price tapping into that liquidity over there as well, as you can see, so tapping that liquidity, going down. But this one is a really nice big one because it's just taking out lots of sell stops over that stop. So you can see every time there's movement in the market, big movements in this currency pair, first of all, price is drawn to that liquidity, down and then up, drawn to the liquidity area that's on the top, take it out. And after that big one over here, you can see price just tumbling down. Now what we have now currently, and this is the reason I'm looking at that or showing you, because currently we have this huge bearish movement in the market, price going up a little bit, forming that big retracement and then tumbling down again. And now we can see price just went and tapped that liquidity area or went into that liquidity pool, and then now starts going down. For those of you that haven't watched my previous analysis on this pair, I was actually talking about price going to tap that liquidity pool before we're looking at any sells to the downside. But I'll show you that on the hourly time frame. Let's go to just take all of these. I'm just actually going to leave that one in because that's the major one that we're actually going to be looking at. I just want to make sure that it is all on all my time frames, and that's perfect. So going down to the 4 hour, okay, we can see that's the area that the liquidity was tapped into. Small little push of that candle. Now, it's not to say, and I'm not biased on a sell off from here. All I'm saying is I'm just looking at what price is doing. So on a daily time frame, and if you look to the left, if you look at the past history on this currency pair, yes, it does look like any time or every time that liquidity has been tapped into, price starts moving to the downside. It's not always the case. So you can see price going, or we can expect price to go up as well. So don't just stick to a bias in the market. The reason I'm saying that, I'll show you just now, is you know, we're thinking, okay, price is going to go down. But on the 4 hourly, it tells you a different story. Okay, so we have got this shift in the market or change in the market, this break in structure. On a 4 hourly, we'll see it on an hourly just now again. But I mean, we have got that area that's been broken, you know, before that big shift in the market. And then with that area, I'm just going to zoom it in a little bit. And like I've always said, we have got that fair value gap, that imbalance in the market. And you can see price going and wanting to tap into that imbalance in the market. And usually when that happens, price shoots up again. So will this price just tap into that and shoot up? You know, and another indicator that I use is my Fibonacci tool, just to show you. So basically price shot up, tapped into that liquidity area, came down, and is now in between the 62 and 79 area on that retracement. So it's, for those of you that's been watching my analysis, this is obviously the perfect time to buy, okay? But we will definitely have to wait and see what price is going to be doing in this area over here. It's not to say that, yes, we're going to buy. You can place your buy orders, but please, for those of you that trade this way and follow this rule, and especially just if you're looking at one time frame, just have your risk in place, guys, please. You know, this is the way I love trading this way. This is the way I trade. I look at my imbalance in the markets, my fair value gap, take my Fibonacci tool out, and then look what the market is doing, but not on a higher time frame. I'm drilling down even more. I want that tighter entries, smaller risk, and you know, that's basically what I'm looking at. On a 1 hour time frame, let's just drill down a little bit more. Okay, so on a 1 hour time frame, now this is what I just wanted to show you for those of you, like I said, that watched my previous analysis. Okay, we had that, just want to see where we are. Here we go. It's right around there, and we had that move on the upside. Just looking at where my analysis was last week. Okay, so last week basically the price moved up. I'm just looking at the dates. So we had that price moving up, and I still said we had that swing low at the bottom, we had that swing high, and I was saying that waited for price to come and tap into this area, basically between the 62 and the 79%. Okay, go watch my analysis on my previous analysis on this pair of last week. I'm going to put the link in the description. Then price came all the way up to the negative 50% area, and I still said, if you look at this high over here in the 100%, I'm pretty sure price is just going to go and tap it out. And that is exactly what price did. Price rallied up and went onto our third area, or target area. Now coming back to today, what are we looking at? So basically what we're looking at is that fair value gap, that displacement in the market. Here we go. Imbalance candle. Just going to zoom out or zoom in a little bit so you can see it. So this is where that imbalance happened. Price started moving up. Yes, it did form a lot of gaps in this area. So we can see that there is also a gap over there. Price going past that gap now. So we're always looking at the first one that was created. And then we can see price moving down into this area now. Now I'm definitely going to wait and see what price does when it hits that, if it hits that area. Because again, let's take out our Fibonacci tool. Always use the two together just to tick those boxes. So we can see that price is now around that 62% and 79% in this area now. So now this is where the box is getting ticked. Before we hit or take the trades, go down to your lower time frames to see what's happening there. Don't just go into this trade. Just scroll down or move to your lower time frames. I like to have all of them open and just, look at them all at once. It's not always easy, especially for those of you that only has one screen that you trade off. But if you've got a bigger screen, multiple screens, you can have all of them open. And just while you're watching at the one time frame, or at least just two, you have the hour and the 15 minutes, depending on what type of trader you are. Have at least two open to see the movement of the two time frames. But now we're definitely going to wait and see what's happening over here, because we also have this little area in the market. I'm just going to zoom out a little bit. We also have that. Okay, right about here. And as you can see, it's a nice structure. So price, not breaking through it, coming down. It's acting as a nice area in the market, going down, respecting that area of previous, let's call it resistance, and then support. So we have got that area on the 62%, basically. Okay, so we will have to have a look and keep an eye on this pair right now on the lower time frames to see what's happening. Will it start moving up? Or is it going to come down even slightly, hitting that gap in the market, then go up? Or is it just going to start breaking down? And if it does break down, if it breaks through this area, I'll definitely do exactly what I'm doing, looking for that break in structure, which will be this over here. So that's going to be your key structure area that it needs to break. So it needs to break that area if we are looking at any sell opportunities. If it breaks that area, what type of imbalance in the market it forms, use your Fibonacci and all of that. Looking at our COT, commitment of trader support, COT reports, we're going down to, or we're looking at the Australian dollar. And with the Australian dollar, we can see that our net positions is getting bigger in a sense. So basically, or smaller. So what we're seeing is the price going down. We will see, we can see longs being closed in the market and shorts being closed. Last week we had longs and shorts being closed. You had more longs and shorts, so basically the price started pushing down, and now we can see that those big banks and institutes, they are pushing that price down even more. So we'll definitely, that's the reason we're seeing this downwards movement in the market. So will this be the area that we're going to look at selling it off, or what is going to happen when price starts hitting this area? Interesting times for this pair, so keep an eye on that. And like I said, drill down to your lower time frames, your 15 minutes, a very important time frame on currencies. I love trading that 15 minutes, or like watching that 15 minutes, and then go down to your 5 minutes as well, just for nice little sniper entries. So guys, that's all from my side. I hope you enjoyed this analysis. If you did, just don't forget to hit that like button, hit that subscribe button, notification bell for more trading content coming your way, so you don't miss out on that. So guys, I hope you are having or had a fabulous weekend, and I hope you will be having a pipful good trading week. Stay safe and happy trading, guys.